Silver just smashed through $103 per ounce with a monster 7.31% surge yesterday, hitting fresh all-time highs, while gold powered to $4,983, up 0.96% and eyeing $5,000. According to Kitco, silver's explosive move closed at 103.08, obliterating resistance like it was paper. This is not a drill, folks. Precious metals are on fire amid safe haven frenzy and a weakening dollar. Trump easing off China tariff threats added fuel, per Kitco News. In this video, we'll dive deep into silver's inventory squeeze, gold's central bank binge, miners exploding higher, the gold-silver ratio compressing, macro tailwinds, and physical premiums screaming demand. Stick around. Your portfolio needs this intel. Let's break it down. Silver spot is trading at $103.08 after yesterday's 7.31% rocket ride to new record highs, according to Kitco's latest data. That's a weekly gain pushing 15% as safe haven demand surges amid mixed U.S. economic signals and Fed rate cut bets. Technically, silver has obliterated the $100 resistance. Next targets are $105.07, with support at the 20-day moving average near $98.50. It's trading above all key EMAs, signaling strong bullish momentum. Now the real story: COMEX inventories. Registered stocks are critically low at around 50 million ounces eligible, but registered deliverable is under 20 million, down 10% week over week per CME Group data. Eligible totals hover at 120 million, but the eligible to registered ratio is flashing red. Shanghai premiums over COMEX are exploding at 5.7 per ounce, signaling massive east-west arbitrage as China hoards amid export jitters. Analysts are piling in. UBS's Johnny Tevis sees $110 by Q2, citing industrial demand from solar and EVs. Citi raised targets to $105 short-term, warning of supply deficits. BCA Research's Ruqayya Ibrahim cautions short-term FOMO risks after 40% YTD gains, but long-term fundamentals scream higher, though high prices could crimp industrial use. Sentiment on X-Twitter's precious metals community and Reddit's r/Wall Street Silver is euphoric. Silver squeeze incoming. Posts dominate with Dyson silver squeeze trending. YouTube channels echo this, hyping the physical breakout. If you're riding this silver monster, hit that like button now. It fuels the channel. Gold spot closed at $4,983 million yesterday, up 0.96% or $47.50, per Kitco, nearly matching its all-time high of $4,987 from earlier this week. Trading Economics confirms $4,989 intraday, with monthly gains at 11.35% and YTD up 80%. Technically, gold's holding above $4,900 support, with resistance at $5,000. The 50-day MA at $4,750 is crushed, bullish trend intact, RSI overbought but momentum strong. Central banks are devouring gold. PBOC added 20 tons in December alone, RBI another 15. Total 2025 buying tops 1,000 tons per World Gold Council estimates. This safe haven binge amid geopolitical noise is relentless. ETF flows? GLD saw 2 BI inflows last week, strong demand per VanEck data. Goldman Sachs's Don Striven hiked year-end to $5,200, stating, "Central bank buying and recession risks propel gold higher." JP Morgan targets $5,000 Q2. Bank of America sees $5,500 on dollar weakness. Nikki Shields from MKS PAMP nails it. Gold's record highs reflect risk aversion. Charts are screaming buy per recent Kitco interview. Drop a comment. What's your gold target for 2026? Miners are finally catching the metal surge. VanEck's GDX ETF closed up 4.2% at $52.30, YTD plus 65%, 52-week range $28.55 per Yahoo Finance. GDXJ, the juniors, exploded 6.1% to $68.40, YTD plus 82%, outrunning metals on leverage. Deep dive on top dogs, Newmont NEM at $72.50, up 5.3%. Q4 free cash flow hit 1.2 B. Realized gold price $4,200 Oz. Production 1.7 meters Oz annually. The gold-silver ratio? At 48.1 today. Gold 4,183 divided by silver $103.08. That's deep into modern era lows, historical 50-80 range. Recent compression from 55.1 signals silver's outperformance. Classic bull market phase. Trading implications. Ratio under 50 screams. Buy silver, trim gold for ratio traders. Mike Maloney of Gold Silver warns. When ratio hits 40s, silver moonshot incoming. Stack accordingly. What's your ratio strategy? Trading it or hodling both? Comment below. Macros are precious metals jet fuel. Fed funds at 4.50% post last cut. Next week's meeting eyes 25 BPs, ease per CME Fed watch. 75% probability March cut. Dot plot signals 2 more 2026 cuts. 10-year Treasury yield dipped to 3.85%, down 15 BPs week. Bond rally lifts metals. DXY dollar index slid 1.2% to 98.50, weakest in months. Geopolitics, Trump trade deal hints on Greenland eased some tension, but Japan financial woes and tariff uncertainty fuel safe havens. CPI at 2.8% YOY, PCE core 2.6%, inflation sticky, but rate cuts coming. Peter Schiff tweets, Fiat ICU, gold silver only escape. Rick Rule adds, miners thrive in this chaos. Physical premiums are wild. Silver Eagles at 108 over spot, 5% premium. Per APMEX JM Bullion. Gold Maple Leafs, 4,195, 0.2% over spot. U.S. Mint sales, 1.2 Matter Eagles YTD, triple YY. Shanghai versus London ARB at 6.0 silver, East squeeze intensifying. Silver 103, 7% blast off, all-time high in. Gold 4,983, central banks hoarding. GDXJ and GDXJ, 0.4 signed 6%, miners undervalued and ratio 48-1, silver takeover and Fed cuts plus weak DXY, where metals rocketing and premiums spike, physical frenzy and my prediction, silver $120 Q2, gold $5,500 year end. Buy dips, and like if you're stacking, subscribe for daily updates, hit the bell, don't miss the next move. Comment, silver or gold for your portfolio. Edge Pulse trade out, trade smart.